Hey, folks, welcome to the Mortgage 101 podcast with Anthony and Manley. Hey, we got a super special guest here today. We're talking about credit repair, all the things that are happening with the CFPB. This isn't a long, extended version, not our normal segment, but I think it's super important. Anthony, tell us a little bit about your friend Jay.
Absolutely. So what Manley's talking about is we uncovered absolute gold nuggets in all things credit, right? And so everyone knows that credit is the most important thing when it comes to purchasing a house. Not only a house, but everything in life, right? It's not like Wild West days where you bought cash for everything. You have to leverage credit in a way that's going to make your life more sustainable. So Gennaro Roberts with G6 Legal is a credit specialist that I've been referring my clients to for over 15 years. Not one, not three, not five, not 10, 15. That's how long this guy goes back. And he has been doing nothing but miracles, not only to my credit challenge clients that are 400, 500 and they want to buy a house, and they just were never taught how to really monetize their credit. But I'm talking about the investors who have 700 FICO but want to get to that 800 so they can leverage credit in a way that has more cash flow. So you're going to have some amazing nuggets. You're going to understand behind the scenes, behind the curtains of how credit works, specifically with the Consumer Financial Protection Bureau, CFPB for short, and what is in store for the future of them and how it affects us, the consumer. So definitely pay attention to this one. It's going to be an extended cut that you're going to be able to take a lot of good nuggets away from.
You guys are going to love it. We're super excited to bring on Gennaro, Jay, and we'll have him on in just a minute. But if you like and subscribe, you're going to find out a lot more good stuff like this. So check out the Mortgage 101 podcast with Anthony and Manley. Looking forward to it. Here comes Jay.
So we would like to welcome Jay, Gennaro Roberts with G6 Legal, a trusted partner. He has helped buyers with credit repair, challenges of collections, and he helps them walk into closings with confidence. But here's the kicker. He's not just fixing files. He's actually been a part of writing consumer protection laws.
Like shutting down debt parking when collectors hit debt off your report, then ambush you with during a credit pull for a mortgage. Thanks to Jay, that move's now illegal.
Yeah, and with 11 million student loan borrowers who saw a surprise with their credit hits earlier this year, Jay was one of the first to actually raise alarms. I remember him talking about this before it was even public and official. He was telling his clients as well as us, hey, there is a massive herd of negative accounts that are about to hit once the government pulls the plug on this forbearance with student loans.
This is awesome stuff, Jay. So excited to have you on and hear everything you have to say. And me and Anthony have a bunch of questions that we're going to ask you, and we're going to let you go crazy and extrapolate as much information to us as you can. So
Absolutely.
Introduce yourself to our listeners. Let them know who Jay is, how he ticks, and how you drive a plane for a living when it comes to not fighting protection laws. I know that you're like the living John Travolta, how you basically park your airplane like we park our cars every night. Tell us about that.
Well, thanks to you, in fact, the house that I live in happens to be on an airstrip. I fly a lot, travel a lot, going back and forth to Washington. In fact, I got back this morning because of everything that's going on with the CFPB, but I'm sure we'll get into that. Man, I want to go back and sort of explain what debt parking is. And the name came up from, truthfully, I was at the Publix, and an ex-girlfriend pulled up behind me and wouldn't let me move. And she says I owed her $50. So she wouldn't let me out. And it was funny, haha, but as I was thinking, because I was in the middle of writing some stuff for our legislative branch, and that's exactly what the medical people do. Whenever you get ready to buy a house or make a major purchase, all of a sudden these things pop up on your credit, and they park that debt there and basically force you into paying it. Because normally when you're in the process of buying a home, you don't have a lot of time to argue back and forth or to write letters or to wait for 30 days and go back and forth. So most people just say, you know what, let's negotiate, I'll pay it just to get it over with. Most real estate agents don't understand that by paying that debt, it does not help the client. It shows a zero balance, but it still hurts their overall credit score. So when we wrote the law, it was about no more medical debt parking in July of last year became official, so that now the hospitals can't just place things on your medical bill. And we can go into why our medical billing in America needs some work, but that's one of the problems. Is that, I'll give you a quick example. Client has a car accident, goes in the hospital, their arm sticking out of their leg. They really need morphine. They're in a lot of pain. Well, your insurance company may pay for the morphine that's from Johnson & Johnson. The hospital carries that, but they happen to be out. But they have the morphine that's made by Bausch & Lomb. So they give you that. You don't have an opportunity to negotiate or say, well, I don't want that one. You just stop the pain. So the doctor gives you the morphine. Your insurance company says, well, we don't pay for that brand. We pay for that brand. At the time, you're in an emergency. So let me give you another example. If I walked up to you right now and put a gun to your head and said, sign over your house, the courts would not allow that to go through because you were under duress. Well, when you're in an automobile accident, you're under duress. So when you sign these things at the hospital, you're not taking the time to read them. You're not negotiating prices. You're just saying, help, I want to stop the pain. Nor are the doctors saying, well, I could give you this, but this is cheaper. They're trying to get to the resolution of your emergency. Yeah. So when they park a debt behind you, they're medically parking a debt. Not just medical, but everybody parks debt there in hopes that you'll just pay it because they sort of they have a gun to your head. Well, now that law is in place that they can't do that.
Your whole thing is you find the gray area and the loopholes in case law to exploit at the benefit of your client. In other words, they treat it as a one-size-fits-all, all lambs go to slaughter, whereas when people have the luxury of having you in their corner, you exploit those gray areas. And of course, if everyone did that, they would change the law. But unfortunately, no one has quick access to people like you, Jay. So those people actually get the better end of the stick while the masses just kind of go with what is presented to them.
Yeah, sort of. Well, I sit on both sides. I actually sit and listen as we're writing these laws. And to Congress's defense, there's no one solution fits all. So we come up with what we think is best. And the overreaching thing is, okay, you can't medically debt park. That fixed the problem. Now, there are nuances to that different people have different problems that we have to go in and sort of find ways to maneuver. So in a short answer, yeah, that's the goal. The goal is to figure out in your specific area, what is the problem and how does the law help you or how does it hurt you? And if it hurts you, we got to figure out how to fix that. And that's sort of where I specialize at.
And so obviously we know debt parking used to be one of the nastiest tricks in the book. And you've just explained how now it is in law. Now, is that primarily for medical only, or does it bleed out into other things?
It bleeds out into everything. Another thing is, like, normally we see it when you pull the credit report to someone to purchase a home. When they see factual data, some of those larger companies that are pulling for major pulls because you're getting ready to buy a home, they have bots that surf the eOscar system that look for those pulls. When that pull happens, they're alerted, your social security number, your name is alerted, and the debt buyers or debt collectors can now place these things in your credit, and 95% of the people just pay it to get it over with.
Yeah.
And that's the problem. That's under duress. You don't have a fair opportunity to fight. You don't have the time because normally you're trying to buy a house, you got to move. There's situations that don't give you the months that it may take to argue or negotiate or fight this away. So,
yeah, and just as a caveat to this before we go into the next student loan section is that makes complete sense because I can't tell you how many times our clients, they try to do their own, credit repair and they just go through a rinse cycle of the same thing. And I tell them, when you talk to the creditor, they just send you to a representative that's going to keep you in spin cycle. But when Jay and his team talk to them, it costs money because now their attorneys have to talk to you. And they got to see, is this juice worth more than the squeeze? Are we going to have our attorney on retainer talk to this dude who knows, has a full firm and an attorney on retainer and say, like, for what? For a late payment that we're not going to see any monetary, gain from? And I think that's the key here, especially with the debt parking. If they're barking, it's a little chihuahua. If you bark, it's a Doberman, it's a pit bull. It's like, okay, we don't want this smoke. And that's the big takeaway for you guys. do not follow YouTube because one, it's outdated, and two, you cannot undo what you've done, the damage. So many times Jay tells me, man, these guys have been trying to fix their credit for 6 months, 12 months, and they just left a laundry list of stuff that those people can now use against them. Because it's like a court of law. Everything's recorded. And so for the viewers out there, don't try to be Jay, because this is a perfect opportunity where it takes money to save money, and you will be doing a disservice to your credit and extenuating that bad credit if you do not know what you're doing.
Well, the thing you said something. One of the biggest problems, social media. You have these influencers that come on and say, "Oh, just write this magic letter." Here's the thing that people don't realize: the people that work at Equifax, TransUnion, and Experian happen to have TikTok. They happen to have Instagram. They happen to be humans. So their job is to protect their interests and make sure that this 603, whatever letter you just came up with, doesn't pass the smell test with them. So they see the exact same thing. So they simply go to work and say, hey, let's change this so we can block that. And the e-Oscar system, keep in mind, when you send these letters, humans don't open these letters. A computer system does. It's called the e-Oscar system. Your letter is scanned and the computer makes the decision whether to actually investigate or just kick it back. Understand, Equifax, TransUnion, and Experian are credit reporting agencies. They're not bureaus. They're for profit. They make their money selling your data. They make their money so that all of the data furnishers, your Capital Ones, all these people pay them to furnish data to them and to maintain that data. So when you send this letter, they don't want to go to Capital One and say, hey, we can't report this anymore, so we can't charge you for this person anymore. So once social media tells you, send these magic letters in. I see them all the time. We have them categorized in the legislature. We have them categorized so you can see from which states they're coming from. And we can always say that's where that influencer is. He said send this letter, and all of a sudden 400,000 letters came in saying the same thing, and they don't get results. So that's the worst part, is that you have people that are really just trying to get people to click on the like button so that YouTube will pay them so that you don't have to pay them. But they actually hurt you. That's the worst enemy of credit repair, is that the work is being done improperly.
Imagine that, social media and headlines from the media telling you to do something that's not the correct thing to do.
Right.
Every day, right, Anthony? Oh, rates are coming way down because the Fed's lowered the rates. Not a mortgage rate, friends. Not a mortgage rate. It's the same thing. You got to be educated. You got to talk to the right people. And you just can't let this stuff go. But hey, I want to talk about these student loans because I heard a little bit of about this. But back in February, 11 million borrowers woke up to an unexpected credit hits when the forbearance ended. Like, what exactly happened there, Jay? Like,
we started talking about this I think in November. I said, hey, once this election takes place, this is going to go away. Here's where they made the biggest mistake, and here's the free nugget. If you were current in January, you can't be 90 days late in February. If you look at your credit report, it shows that you were 90 days late. Well, the law says 30, 60, 90, 30 days late, you have to be notified. So you can't go from 0 to 90. That's the first problem. The second problem is the Department of Education was overwhelmed with what to do. They did not get an answer because we didn't know if Kamala was going to win or if Trump was going to win, so nobody made any moves. So that's the first problem. We didn't make any moves. The system took care of itself. The system said it suspended in November. We never sent notifications out. We never told people, hey, this is coming to an end. We didn't make the phone calls that were promised, primarily because we started reducing the number of employees. So now you can't do it. You don't have the manpower to call. You don't have the technology set up to call. So the computer dropped to the next level. Well, they're 90 days late. And it impacted a little over 11 million people. Now, the way to fix it is going to be difficult. You're not going to fix it writing a letter or trying to get the Department of Education on the phone. The way we're fixing it is that we're just literally suing the Department of Education. And we're suing the credit reporting agencies because they have a responsibility to know, more so than the Department of Education, that you can't go from 0 to 90. So their main, Equifax, TransUnion, and Experian are on the hook because they should know. Nobody goes from 0 to 90. You have to go 30, then 60, then 90. So the best case scenario was in February. Everybody found out they were 30 days late because it was due in January. Well, you can't be current in January and 90 days late in February. So
What do you think is going to be the end result here, Jay? How are they going to fix this other than people having to sue to show that the information is not correlating correctly? Are they going to do like a mass fix? Or is there? What is your opinion? You think something's going to come out and they're going to state
yesterday, and I think that with so much going on with the Consumer Finance Protection Bureau, which was the agency that would have governed this, if Russ Vaught is truly going to shut that agency down, then you have even fewer people to help. So the only thing that the lay person can do is probably write your senator, write your congressman, and hope that they'll get involved on your behalf. The other thing is you can all get together, groups of you, and then send in letters at one time. Normally, we never have enough time for that. So our approach is we're going to sue Equifax, TransUnion, Experian, and the Department of Justice, Department of Education. And now we're asking to get in front of the federal courts. They're a little bit less impacted. They're not as busy as state court. So we're trying to get into federal court and add as many clients as we can to that to say, here's our problem. We want a federal judge to hear it. We want to argue and litigate this because the Dodd-Frank Act, which is the Consumer Finance Protection Bureau, is the agency that would have fought for the consumer. But if that continues to shut down, I mean, they went from 1,500 employees to 150 employees. We don't have the manpower to fight 11 million. Well, 1,500 wasn't enough, but 150 is certainly not enough. So they're overwhelmed at this point. So we have to, all we can do now is file lawsuits and call and fight and call and fight and go get in the faces of those that can make the decision, which is why having an airplane is helpful.
And speaking about that, so I mean, it basically sounds like the laws being pushed is a big question mark and to be determined. One, if the CFPB is going to be around to be able to do it, or two, if there's going to be some type of consensus. But touching back on what you talked about how social media and all these incorrect, statements that are out there, what's the biggest myth right now you see online that's hurting buyers, and what's the truth under the law?
The biggest myth is that all you have to do is say it's not mine. Somebody stole my identity. That wasn't me. We have found a way to fix that. Remember, I stand on both sides.
Yeah.
Government, we found a way to fix that. We're now going to biometrics. You want to know what that is? Try to go buy some furniture from, say, Rooms to Go. When you go in, they're going to ask you to do exactly what we're doing now. Look at the camera, turn to your left, to your right. We're going to scan your driver's license. We're using all of that data to determine that you actually were the person. So you won't be able to use that much longer. The second thing is, whatever you see on social media, 99% of the time, it's a lie. 1% of it may be true, like, yeah, write a letter. That could be true. The rest of it is garbage. Think about this. I make a living fighting for you. That's why I make a living doing that. Why would I give that information away? If I had a secret sauce, a secret weapon, why would I freely give that away? So what they're doing is they're selling you this magic bullet in hopes that you'll hit the like button. So enough subscribers or people are liking it, they're going to make a ton of money. And then you won't hear from a year from now, you won't know who they are. The credit kings and the credit whatever these people are.
Yeah, you just dropped a big truth bomb, Jay. I mean, what you said as far as a myth is basically everything online is just a bait tactic, right? That makes sense, and people need to know that. But the truth that you just said, which is interesting, is that just like when you see this big push for the driver's license, meaning the star, it has to be one. You can no longer have, different ones. And the other aspect is now with federal entities or state, I've seen it now with state, is the ID.me that they have verified and confirmed. So that's going to be interesting because, like you said, right now we are in an analog going into a digital world. And so do we have these things that we can help protect us under the law of it ain't me, it ain't me. It's just not me. You're not going to be able to do that going forward in the future when you do the ID.me biometrics because now they have scanned you. They're going to send a file going, this is you. Here is a video. Here's the biometrics. Next, please. And now they just took all of those months and back and forth, condensed it into one email, which is going to save them time, money. So from what I hear, what you just said is that we are going to see a shift over the next months and if not less than 2 years.
It's happening. That's the reason why they want to shut the CFPB down. The CFPB's largest argument is that ain't me. Well, if we fix the that ain't me, you don't need these people. You don't need this organization. That's the brain trust behind why Russ Voss wants to shut it down. If we're using biometric, it forces us down this path. It forces us this way, and that's 98% of the argument is it wasn't me. The problem with that thought is that it can be used. Was it TransUnion was just hacked? 45 million megabytes of information that went out. That's everybody's stuff. We haven't gotten over the Equifax data breach that happened 10 years ago. The hackers are still going through that information. I think biometrics is a great thing, but it can't be the only. We can't force everybody down that tunnel because they're going to steal biometrics. Think about it. If you hack TransUnion, you didn't just steal my name and social security number. You stole my NIL, my name, image, and my likeness. So now you take my face and put it on Anthony. Now Anthony looks a whole lot better because my face is there, but I'm not Anthony. If you're going to fix your credit, you need to do it now because you won't have an opportunity in a few years.
So you're saying you're going to be out of a job in a few years, or you're going to have to pivot?
Yep, absolutely. Absolutely.
Okay.
We know it's coming, and actually, I welcome it. Let me say this. I think biometrics is going to present its own problems, which we have to stay on top of in reading and understanding. It's going to present its own set of problems because Equifax can be hacked, because TransUnion can be hacked, because these places can be hacked and information can be stolen, and you can still buy things online. So I can take my picture, put it on your face, and now I'm you, and I just used your credit card to buy something.
You're like the oil light canteen, right? The oil light canteen, Manley, back in Standard Oil days, they probably were thinking, I'll never be out of a job. And they weren't thinking with Thomas Edison and the light bulb. They're thinking, I'm always going to have to light the street lights. I'm always going to have to go out and do things. And if they would have known what they were doing, then they would have started learning about electricity and how to screw in a light bulb, not light a flint. Manley, what you got?
I got a question here. Those disputes that trip up a lot of buyers, explain why disputing all accounts is at the wrong time can actually get loans denied. Like,
good question.
We're on the same path here.
Okay.
People go crazy and they write the letter, I dispute, it wasn't me. Tell us how that's working.
A lot of times what happens is, keep this in mind, I'm a data collector. I buy debt from Capital One to try to get you to pay that debt. Any information that you give me can and will be used against you. For an example, you mail me a letter. What address did this come from? Now I can match the address to say, that's verifiable. They're verifying trinkets of information. Equifax and TransUnion and Experian are the three that we call the three big ones. There are 105 credit reporting agencies that collect your information. And there's some that collect your job information, some that collect your medical information, some that collect your police records. You're being tracked in this country in everything you do. There is a factual report that you can order that tells you exactly who and what you have. And I'm going to give you the name of that because that's something that I think everyone should have. LexisNexis. Order your LexisNexis report and you're going to be surprised. It's going to be about that thick. It'll have who your next door neighbor was, what house you lived in. That will show you that you're being tracked and what's being tracked. So now to verify information, this is what they use. Any bit of data verifies your information. And here's where I argue. If someone stole my identity, don't you think they have my address? So if I write a letter to you and I say, hey, this isn't me, I didn't do this, but I use my address, you're going to say, yeah, it is you because it matches the address. Their job is to just verify pieces of data.
Non-biased, like you just said, Jay, and that makes sense. When you dispute, if you're disputing stuff, they're not taking your word for it. They're following the data. And so that's what people don't understand. And I mean, just so you know and viewers know, when you buy a house, Govy terms, you can't have an active dispute. One, it negates the credit profile score. Now, to be determined if it's a higher or lower amount or it's very subjective or very minimal. But you cannot have disputes if you go FHA or VA or USDA. You have to take those disputes off. And so many times people come to me and they go, Anthony, I just gone through 12 months of credit repair and I'm good to go. And I checked Credit Karma, my Vantage score, and I got a 680. I pull their credit and they're at a 660. And I go, but you have all these disputes. Please take them off so I can re-pull. They take the disputes off. They're back down to a 560. And they're like, what the heck happened? I'm like, congratulations, you just paid $100 a month for 12 months for some credit company to tell you that they were fixing your credit when actually they were just disputing giving a false narrative. And you are a big proponent. And that's why 15 years ago, when you started helping my clients, I noticed that none of your clients came to me with disputed accounts. And you told me long ago that is the ugly way to scrub credit. That is not the textbook way to take care of credit. And if anything, it's a vessel for the credit reporting agencies to affirm debt. And I remember you told me that. You said they want you to dispute it because you're giving them data to confirm the debt. So these people, unsuspecting, are like, I'm disputing this. And why do you think on TransUnion, Experian, and Equifax, there's a one-click button to dispute a derogatory? You're basically fast-tracking, this is mine. That's how I see it.
Think of what's the first thing that happens when the police arrest you? They tell you to, if you talk, you're in trouble. Whatever you say can and will be used against you. So if you say something, it's being used against you. If you say, hey, I'm disputing it, it's being used against you. So you have to be very, very careful in doing that, because that's not. And credit repair companies make a lot of money disputing. They make a ton of money. They charge you monthly, $99 a month. And you think, oh, they're going to fix it. And it takes you 6 years. They're going to fix it. And they're just writing a basic I dispute. And that doesn't fix anything. What you need it for it to do is to be removed. It shouldn't be there. Take it off. Get rid of it. And do not come back. That's what you need.
Before a buyer even pulls credit with the lender, what's your 3-step Reddit checklist that you can give them before you get the best shot for an approval?
I try to send my clients to Anthony because he'll do a soft pull. I want to explain to people what the difference in soft and hard pull is. With the way Anthony does a soft pull, he can see it doesn't hurt you. But when you go to buy a car and they say, oh, it's a soft pull, there's no such thing. The definition of soft pull is, remember what I told you half hour ago, Equifax, TransUnion, and Experian sell data. CarMax says, hey, we want to find all the customers that have a 580 to 620 that live in this zip code. And they sell your data. That's a soft pull because you didn't request it. They're just looking at who they can make an offer to. You get a credit card in the mail, you pre-qualify. That was a soft pull because you didn't request credit. They're searching for you. But if you pay attention, they tell you you're pre-approved, just sign this. What you're signing says, I am now asking for credit. That's a real pull. So when you go to buy a car and you sign your name, you're giving permission to pull my credit. It's called permissible use. You're giving permissible use to pull my credit. That is a hard pull. That hurts you. That is an inquiry. That hurts you. So the first thing I would say is make certain before you do it, pull your own credit report. Go to freecreditreport.com or any one of these free sites. Look at your credit report. Give me or somebody like Anthony a call and say, let me show you what I have. And then you pulling your credit is not a hard pull. So if you go like we use Smart Credit, for example, it's you pulling your credit. That's not counting against you. When someone else pulls your credit, it hurts you. So first thing I would do, pull my own credit and look at it and see how many inquiries I have, how much bad debt I have versus good debt, because there are algorithms that Anthony and other different scoring models are used for different things. Housing uses something different than cars. Cars use something different than airplanes. Everybody uses something different. So first pull your own credit, look at it, and then talk to someone like myself or Anthony, get some advice is what do I do next? But for God's sakes, stay off of YouTube, stay off of TikTok, and every other kind of talk there is. That'll get you killed.
Man, Jay, you've been in the thick of it for years, all right? From ending debt parking to student loan storm. I mean, you've helped countless buyers holster up and walk into closings with confidence. Manley, what you got for this real-life Doc Holliday?
And just like Doc Holliday at the OK Corral, you showed us what it means to stand steady in the crossfire. Do not panic. Just the facts, precision, strategy. You know, thank you so much for riding with us today, Jay. Appreciate everything you're doing for us right now. And this is a wealth of knowledge. Want to have you back on again. It's because it's not about who draws first. It's about who's prepared. We need to know what's going to happen when the dust flies. Stay calm, stay ready, and you'll win your showdown for sure.
Yeah, and Jay, I mean, for our viewers, how can they get a hold of you? How can they get your expertise? How do they get a hold of the man, the myth, the legend?
Because I write legislation, I don't advertise. But my phone number, if you text me, 770-231-1078. Send me a text and I'll call you back. This is the time. If you want to buy a home, make a major purchase, this is the time. And
you're not going to have the tools that you have available right now. Basically, listeners, what he's saying is you have an easy fast pass right now to get on Space Mountain. And if you wait, you're going to have to get in that line that wraps around the Dole Whip, and you're going to be sitting there for a long time, and that means you're going to miss out on opportunities. Jay, we're going to put your number flashing on your screen so that way people know. You are a wealth of knowledge. For the past 15 years, you've literally helped hundreds of my clients go from not understanding credit to understanding the fundamentals, and it's just invaluable. And one thing you told me, and I'll end with this, is you made it crystal clear to me how important credit is, especially in a home buying process, but in life in general. And you said, with people with an 800 FICO, they can make $50,000 a year, but it feels like they make $300,000 a year because they're leveraging credit in a way that gives them that lifestyle. Whereas people come to you making $300,000 a year, but they got a 600 FICO and they're living like they make $50,000 a year. So it's just like investors leverage real estate, consumers need to leverage credit in a way that's going to benefit them, not Capital One, not these big, bureaus. To capitalize on that, the only way you do that is if you know the language of credit. It's a language. You have to learn it. And Gennaro is a master at the language. And so I appreciate you, brother. You've been amazing. Thank you for constantly being the war drum for our clients day in and day out. As soon as my clients get funded, I look back and go, they came to me with a 400 FICO and now they're buying this house. They better call Jay, and they never do. So
they never do. I never get that.
I'm going to say this, guys.
Get all the thanks.
If you use Jay, make sure you call the guy and thank him for taking you out from the abyss. I'm going to say it again. I'm going to say it again. Jay is not just for credit challenged people. He is also for people who wants to take it to the next level, whether his team wants to get you business credit, whether you want to completely diversify yourself, or whether you want to get to that 800 score to where you're walking red carpet treatment, which makes you feel like you're making so much more because you're leveraging. So the 700s clubs, if you're not an 800s club, Jay is still your entertainer. It's not for the 400s or 500s. This is for people who want to maximize credit in a way that's going to leverage themselves the best way possible.
That's true. Leveraging your credit is, I couldn't have said it better. You're exactly right. You can make $50,000 a year and have an 810 credit score. And I have friends that are like that. One of my very good friends, I won't say his name because he's in our conference room. He makes $62,000 a year, and he has a house is like $475,000. I'm helping him buy an airplane. He wants to buy an airplane. You wouldn't think, but he is a master at leveraging his credit. He does not overextend. He knows exactly how to buy. Robert Bailey, my partner, that's his expertise, taking you to zero interest credit cards, and then zero interest credit card for this year, and then let's get rid of that one. Let's go to this one. So there's a whole process that Robert does that goes through and shows you this is how you leverage credit. So 0% interest credit cards for the first year, use it, and before it ends we switch to another one. We do a balance transfer, and so you're never paying interest, but you're constantly paying it off. The better your credit score, the more opportunity you have to do stuff like that.
Awesome, Jay. Appreciate you, brother.
You're very welcome. Thank you guys for having me.
Yeah, thanks, Jay. We hope to have you back again.
All right, thank you.
Safe travels, partner.
All right, bye-bye.
If this episode helped you feel more confident about your home buying journey, do us a favor. Share it with a friend, subscribe, leave a review, and if you've got a question or a topic you want us to cover, hit us up with a DM or a comment. Thanks for listening to the Mortgage 101 podcast. We'll see you next time.
Hopefully you like all the education that you're getting from Manley and I. Do us a favor and smash that like button, subscribe and follow, and tell all your friends and family about it.